Vetri Subramnian has been waiting by and patiently at that. Vetri, thanks so much for taking the time today. The question I asked you was about that gross borrowing number, which at over 17 lakh crore rupees is perhaps what the street had not budgeted for. It's more than expected. So one would assume that bond yields will harden. What, according to you, are the implications of this?
Good point, Alex. I think without doubt, the increase in the gross market borrowing is slightly more than what people had estimated for. That's the budget estimate. Gross market borrowings are effectively going up almost about 16-17%. So that is slightly more than anticipated. I would expect the long end to harden slightly in response to this. But, I would also say that, look, the overall trajectory in terms of trying to bring down debt to GDP and addressing the elephant in the room, which is the contribution, or rather the big bite that interest costs take out of the tax revenues that government earns, is something that they are continuing to chip away at. So yes, maybe hardening in the short term, but in the longer term, it should give bond investors a lot of comfort that the Indian government is not changing its commitment to fiscal discipline and bringing the budget deficit down.
So, Vetri, looking at the overall budget and the kind of emphasis given on certain sectors, given some tax concessions and elevation in terms of the backing to that particular sector. In terms of a fund manager and an investor's view, how would you look at recalibrating of the sectors of choice post this budget and the positive areas with potential development going forward in terms of return propensity?
Okay, that's a very tough question, but it has a very easy answer. Nothing has changed, right? So I think it's important to keep in mind that, I was standing by listening to the PM, and I think he made the point very well that, this is all about keeping our eye on that long-term picture of where we want to be in 2047, Viksit Bharat, but making sure that we achieve it while keeping, inflation and our macroeconomic parameters in good health and trying to achieve growth on a sustainable basis. What is left over in the budget when you look at net tax revenues minus interest costs, the defense costs, the cost of running government is a very small number. And, really there's not much that the government can do to dramatically impact my investment choices, in our mutual fund schemes for that of my fund managers just because of slight, allocation differences they could make in the budget. So I would, very simply say to your question, there is no change. I think, India's growth trajectory is something that we remain confident about over the long term, and there is no major spending change in this budget that should cause any fund manager to have to dramatically rethink their priorities.
So, interesting comments coming in from there, but thank you, Vetri.